Yes, baby. We're back with another update, another podcast update. Joel is back in the building. Joel, where were you?
I was in Dublin.
Hey, with the Irish.
With the Irish.
You brought any luck back with you?
Oh, I don't know.
You getting blown away by the
Mate,
what was her
literally.
name?
Kira. Storm
Kira. She was blowing you away.
The weather was so bad. Yeah, literally. It was so windy and cold and wet. But, like, Dublin is still, like, proper sick. Because you don't really go to Dublin to be outside anyway. Like, it's nice to walk around, but it's all about, like, the pubs and the Guinness factory and all this kind of stuff. Yeah. So I would definitely go back.
Definitely. Yeah. I loved it when I was over there. It's amazing. Such a good vibe. Everyone's just having a good time.
Mate, Irish people merry. Are so friendly.
They are. In comparison to us, we're grumpy Fs, basically. So anyway, let's jump straight into this. Dude, it's been a mad one. It was mad while you were away. There's plenty of talking points. I think I'm keen to start off talking about the dollar, okay?
Yeah.
You know, the dollar's been on a massive surge for some, 6 sessions in a row. Seen a little bit of cooling today, which we'll go into in a bit. But one thing that I sort of updated the members on while you were away was, at the end of the day, you remember last week we had decent data points from the United States, ISM. Well, by the time you're watching this, it's the week before. What I mentioned few key reasons. One is a data improvement. Two, that at the end of the day, the US were being seen as more of a safe haven, right? Because in comparison to its peers, the economy is generally stable, right? Yeah. And then I was mentioning how, they're still, in comparison to the other majors, they're paying high interest rates, right?
Exactly.
So from a foreign investment perspective, you're going to put your money into dollars, you're going to put your money into US because you're going to get higher rate of return. So, yeah.
Exactly. And I mean, it's not just the US side that's been benefiting the dollar this week. Like, things have been bad in the Eurozone as well. Like, this week, we had industrial production data, and it was shocking. It was terrible. I mean, it was mainly bad in Germany. I think in December, industrial production fell by 3.3%, which is in 1 month. That is ridiculous.
I think it was decade lows for Germany.
Exactly.
Decade lows, dude.
Exactly.
Like, and bear in mind, guys, Germany is the number one economy in the Eurozone. Yeah. It's the largest economy. So if anything happens with them, of course, it's going to weigh heavily upon the euro.
Yeah.
And the euro smashed, dude. We broke, just February alone, right? We've gone from, just above 110 to 110.50. And like, we've taken out 109 now. And like, how far can we go?
Aim to 108.
Yeah. We're talking about 105 today, right?
Yeah, we
105
were.
region, you can see that.
Yeah.
What else have we had this week? Powell was also spoke up the dollar this week.
Yeah.
He was speaking to, what was it? Is it Senate Banking Committee?
It's the semi-annual testimony where he basically has to just speak in front of all the US politicians and like they question him and stuff, like keeping the Fed accountable, that kind of stuff. But sometimes he gives good nuggets, right, which markets like. And this week he was talking about, easing off with the repo operations and that was, benefiting the dollar at the time as well.
Because repo operations are a more dovish move, right? They're dovish. They are a dollar negative. So that is positive for the dollar. I think markets really picked up on that headline because we actually spiked for cooling and then going again. But he was also still upbeat on the US economy. He did obviously, again, similar to the FOMC rate decision itself, he did acknowledge the coronavirus, but not too much in terms of concern for the time being.
Yeah.
I think he, from his tone, he believes the US economy can withstand this, the little blip there, what that may be caused. It's still unknown, right? We're still waiting for February data. Yeah. What else? What else we had this week?
RBNZ was a good one. Oh. We saw a massive spike in NZD, the Kiwi, after RBNZ because it's just nobody was expecting them to completely drop their bias towards cutting rates.
I know.
They're neutral now. They're completely neutral now. Nobody was expecting that.
And you did write something on this as well, right?
I did, yeah. There's a blog earlier in the week. If people want to check it out, I'll go into a lot more detail about it. But it was a bit of a surprise. So that's why we saw Kiwi rally. But since then, we have seen it sold off a little bit. Coronavirus concerns, all that kind of
just
stuff.
Like his cousins over in Australia, right?
Exactly.
We had the RBA, they were not so dovish. Markets were actually expecting him to be dovish, but they weren't. Aussie dollar was allowed a rally to the upside, but again, vulnerable to risks, vulnerable to being inside. So guys, I think you still got to remember that at the end of the day, no one knows. It's still alien right now in terms of the full impact that this coronavirus is going to have on the economy.
Yeah.
I was talking to a good contact of mine, business contact of mine, Song, and he was just telling me how, so many businesses right now, because he's got a number of contacts in China, so many businesses right now are going out of business. So many businesses are having to lay off all these workers, dude. Imagine how much of an impact that's having on the economy. All these layoffs. Yeah. People can't go to work. They only resumed the other week. And that's just for some businesses. Yeah. JP Morgan, Goldman Sachs, all these big banks are cutting China's growth forecast massively.
And this has got to spill over to Australia, New Zealand. And a lot of people, actually, guys, this is another reason why Euro's been getting hammered compared to the dollar this week. Because everyone always talks about how the Eurozone economy is more open to trade than the US. And they're more connected with the Chinese economy. So the worse coronavirus is in China, the more of a negative effect it's going to have on the Eurozone compared to the US, right, who's a little bit more closed off to international trade. So, this was another theme that was hammering the euro all week as well.
Well said. Well said. No, you're right. I totally slipped my mind, but that's very, very true. That's very valid. Yeah, they're heavily reliant on that relationship there with China, especially on the manufacturing front. Yeah. What else have we had this week?
I think those are pretty much the main points, but
yeah, I believe so. I don't think we've had any other. Oh, let's just quickly touch upon the pound, because so many people were hammering me in messages, and I was like, mate, Joel did a video on this about the spike to the upside. So not everyone would have realised, but there was a huge spike to the pound, somewhat a little bit overdone, if you ask me. Yeah. But a guy who I think is an absolute moronic human being. Yes, he stepped down, the Chancellor of the UK. So this is a guy that basically was saying, get used to it. Us not being having relationships with EU partners, like get used to it, as he could just casually say that. But anyway, he stepped down. And why did we see a spike in the pound, Joe?
Well, basically, he was always seen as somebody that didn't want to do as much fiscal spending, right? Johnson wants to spend money. He wants to spend money on infrastructure, all this big, stuff.
He's very pro-pound, really, isn't he? He's good for the pound.
Exactly, very pro-pound. And this old guy, who was Chancellor, Javid, was seen as kind of preventing that a little bit. So they got rid of him, and now they've got this new guy in. And to be honest, I mean, he's called Rishi Sunak, but it doesn't matter who he is, because it's Johnson who now controls the Treasury, because he's basically expected to be like a puppet, if you know what I mean.
True.
Johnson's pulling the strings now.
True.
So, now we're thinking we're going to get a bit more fiscal stimulus in the UK.
Yeah, and that's obviously a big pound positive. Guys, obviously, look, at the end of the day, I don't even want to sound like a broke record. It's true. The talks are starting in a few weeks, okay? We have seen nothing but sour commentary from both sides. Again, the other day, I did a video on it, I think at the start of the week, when you returned on Wednesday, about commentary coming out of the Brexit chief negotiator, Mr. Michel Barnier. This, and obviously he still wants to make an example out of the pound. He's just out of Britain, and he was just saying again on the banking. There's no room for Johnson to renegotiate anything around, the way UK banks operate within the EU. Yeah, they can still follow that. Remember that MiFID stuff that we saw before?
Yeah, exactly.
How they could make it more favourable for Europe, so people leave London, businesses leave London and go and start up in Europe, which would be massively pound negative. So. Guys, extreme caution. Do not get caught off guard. Counter trend trading, one, and then two, counter trading the fundamentals, because the fundamentals are still, be cautious, right?
And it's choppy, and it's going in both directions at the moment.
I did a video on this, how choppy the markets are at the moment.
You did.
Because this coronavirus. No one wants to overcommit.
Yeah.
So you've got to take what you can right now. Kind of be in and out, adjust your strategy.
Yeah.
Obviously, I did a video on this anyway. Look, next week, let's go some of these data points.
Yeah, man, there's a lot.
What have we got? GBP, go on.
Starting off. Okay, so I can't remember the order of things, but we've got retail sales, CPI. We've also got PMIs to finish the week as well.
Are these still for January, by the way?
These are, they're all for January.
All
for January. So, we're just looking for that evidence that we're actually seeing a post-election economic rebound.
Will we?
I think we will. I think we will, because all the surveys... So we've had PMIs for January already. We had them last month. And they suggested that we will.
Oh, they were good.
Exactly. So I think this is more like the hard data. So I think we will see that rebound, which will probably... So those things will probably be pound positive.
They would be pound positive.
Yeah.
Okay, they would. Maybe we could get a final pump with all that big data next week, a final pump before a big dump heading into the talk. So, exactly. Okay, we've got that. Australia as well, definitely keep an eye on, right?
Yeah.
We've got big labour market data. Unemployment rates expected to tick higher, which isn't good for the RBA.
Yeah, and that is in the data before the coronavirus hit.
Ooh, okay, so
yeah.
even if that's bad, that's going to
Exactly.
hit Aussie dollar hard. So we've got that, and bear in mind, obviously, with the RBA, the labour market is their number one barometer.
Yeah.
You know, when come and look at rates. So if that is bad, expect the rate expectations to rise again, and AUD get slammed, as we always say. Also in the spotlight next week, CAD.
CAD, yeah.
We've got CAD CPI.
Yeah, retail sales as well to finish the week.
And obviously, CAD's been strengthening this week, right?
Yeah.
Well, to the latter stages of this week. The latter stages because of the oil market rebound, dude.
Yeah.
You've seen. And bear in mind, this is just pure, I don't know, because we're still waiting to see what OPEC do.
Yeah, I think one of the things that we've seen this week is it's been up and down in terms of risk sentiment, but there has generally been an improvement in risk appetite over the whole week. And you've seen that most pronounced in oil prices because, I mean, oil's volatile, isn't it, compared to stuff like stocks. And that's been supporting CAD, definitely.
Yeah, I think it'd be interesting to see because at the end of the day, I think still at the moment, the markets are very much in wait and see mode. I'm talking about oil, WTI, Brent, whatever. Wait and see mode to see what happens with OPEC and Russia. They're still dragging their heels. We haven't heard anything new there. Yeah. So just if anyone's an oil trader, just bear in mind, obviously the markets want a reduction in oil. They want a reduction in supply of oil right now. We even saw the DOEs this week. There's another build. So there's a lot of glut. There's too much supply. Not enough demand. Yeah. Demand's falling. Coronavirus, so on and so forth. So that could smash up oil to pieces if Russia and OPEC do not pull their fingers out of places and sort things out. But look, that's pretty much it. Another big week. Guys, do not forget to check out freaknetwork.io. We do this every day. Me and him live and breathe this stuff.
We do.
So check out freaknetwork.io and check out our courses, both fundamental and technical, at forexfundamentals.io. Baby, let's get it. Have a smashing week.